Hey, well, welcome everybody to the Basics and Beginner Break-In. What this class is going to be focused on is for all of you guys that know nothing about trading, right? Absolutely nothing about trading. So you guys, are coming in from TikTok, you guys are coming in from Instagram, anything like that, and you guys have absolutely no idea what trading is, how to do it. You guys just saw, the profits, you guys just saw the money being made, and you guys are interested. Cool, that's great, awesome. This class is basically for you guys. It's going to focus on from the bare bones basics of what the hell is this to, all the way to where you guys can now comfortably take your steps and watch a beginner class without, feeling completely lost. This is basically your orientation. So first off, what is this? What is foreign exchange? What is foreign exchange? The first thing you have to say is foreign exchange is basically the exchange of money, right? So in the world, there are certain markets that each currency has a certain value behind it, and that value fluctuates just like everything, right? So the value of, say, the dollar is measured by the dollar index, right? So the value of the dollar is valued by the dollar index, or the DXY. You're going to hear this a lot during your time with us, right? The dollar is valued by the DXY. Now, the dollar has, sometimes has a value of, say, 96 on the DXY, sometimes it has a value of a 93 on the DXY. It really all just depends on the market conditions, right? The value fluctuates, which, if you place it into a graph, would look something like this. Right? It would look something like that, right? That's basically what a graph looks like. Now, what the foreign exchange market is not just buying and selling the dollar, right? What it is it's basically each pair compared to each other has an exchange rate, right? So say that you're going to England, right? You're going to England, right? You're coming from the US where you use the dollar, right? And you're landing in say London, right, where they use the pound. Right now, you can't use the dollar in England, can you? You can't. The same thing if you came from, from England and came to the United States. You can't use pounds in America or wherever they take the dollar, right? So what you need to do is every single time that you land at an airport, right, you have to go to an exchange house. And these little exchange houses are where you basically, it's where you change your money. So in goes the dollar, they take a little fee, right? And then out comes the pound, right? Perfect. So now you have transferable currency from, say, the dollar, right, to pound. So now you can use your money wherever you went to visit. But as you can tell, right, this exchange rate, say, it's 125, right? Say it's like every pound is worth $1.25, right? This exchange rate is not fixed because the economy of both the United States and England, right, are not fixed. So what happens? This value can either go up or it can go down. Depending on the market conditions, it can go either up or down. That is what we trade. But it's been made simplified by charts, right? And these charts are very, very simple to see. So these charts are, fairly simple. What they are basically, you have time and you have value, right? And this value is not just a singular axis, it goes down as well, right? So say this is, the dollar, right? And say this is the 1-to-1 mark. So instead of there being a zero, how you're taught in school, that this is the origin, right? It's not exactly the origin. So, whoops, not what I want to do. So what happens is your flat line right here is going to be the 1, right? This means that the currency has the exact same value, right? This means that the currency has a 1-to-1, right? So, if it was the dollar to the pound, it would be $1 equals 1 pound. That's basically what it would be, right? So say we're at 125, right? So we're over here somewhere, right? Now, what's going to end up happening is, say we have, you know, the dollar coming up like this, and this is our current position right now, right? This is today's date. So how the market is broken down is a couple ways, and I'm going to show you an actual example of this on a chart. I'm going to show you an actual example of this on a chart. So let's go to GBP USD, which is the actual Great British Pound to the US dollar, right? Let's go check this out. Now, let's get rid of all our drawings real quick. Cool. Now, these are a little bit different candles from what you see on your normal trading view. It's just really aesthetic, you know, changes. It's nothing really important. So, as you can see, this chart is a little bit different from what you're used to seeing. Now, what is this chart? This chart essentially is something called a candlestick chart. It's very common in the economic sector. A lot of people, you know, that come from the mathematics sector aren't exactly familiar with this. But there's a couple things that you guys can grab from this. Each candle opens at a certain point, right? So for example, let's take this candle, for example, right? This one right here. Let's take this candle, for example, right there, right? Now this candle right here, if we focus on it, right? If we focus on it, what it has a couple things, right? So it spans, as you can tell, right? There are multiple time frames. There are from minutes to hours to days to weeks to months, right? Right now we're on the daily chart. Each candle opens in a new day. Now, when is that new day? That new day starts at 5 p.m. Eastern time every single day. Okay, that's when the new foreign exchange day starts, basically, right? Now, right here, it opened at 5 p.m. EST, right, on June 1st, 2020. Okay, cool, easy. It says it down here, right, June 1st, 2020. Now, when did this open? At 5 p.m. Eastern time, the 2nd of June, 2020. Now, do you guys see how it goes by value over time? But each one of these candles is 1 unit time. Now, what does this mean? Each candle, depending on your time frame, is equal to 1 day. Okay? To emphasize this, let's go to the 4-hour chart. Each candle opened on 4 hours, right? And then 4 hours passed and it closed. Right? Now, yellow are bullish, or bullish basically means that the market is going up, and bearish basically means that the market is going down. That's all it means, right? So right now we're comparing the US dollar. Sorry, we're comparing the Great British Pound to US dollars. How many US dollars does it take to make 1 Great British Pound, right? Now, what we're saying right here is this. This right here opened at 9 p.m. and closed, 9 a.m. and closed at 1 a.m. p.m. Sorry, right? Okay, that's what this is saying right here. Cool. Now, it's a little bit more complex than this, but now you guys can tell that each one of these candles is made up, right, of multiple time frames. Price is fractal. Now, what does fractal mean? Fractal basically means that I have on the daily, right, on the daily chart, I have this little candle right here, right? And it's one bullish candle, right? Remember that bullish means going up, right? It opened on June 1st, right? Now it opens, and if I go to a lower time frame, say, you know, the 2-hour, and I drag back to this, we can see that price was completely bullish here, right? Now, did it have a little bit of, you know, drawback and drawdown? Drawdown basically just means that it goes the opposite way, right? So you see how this is bullish and it starts going down? That's drawdown, right? Or retracing. That's also what we call it as well. So you guys see how it's completely going up? So this is a concept called major and minor trends, right? And it's a fairly simple concept. Major trends is basically just when you see this on a bigger time frame, right? This is its parent trend, meaning that this is what you see on a higher time frame. This is the overall message of where it's going, right? Now, if you look at it on, a lower time frame, you're going to look at it and you're going to say, hey, this looks a little bit different from what I saw on, the single yellow bullish candle on the daily. Exactly, because that's its parent, uh, that's its parent trend. This is its you could call it a daughter trend. You could call it a minor trend as well. I've also heard that called before. And basically, this is just showing all the minor fractal movements of price. Because price isn't going to go from point A to point B in a straight line. What it's going to do is that it's going to have these little retraces and these little jumps and ups and downs until it actually gets to where it needs to go, right? I hope that makes sense so far. Now, so far we've covered what the foreign exchange market actually is, right? Now, we aren't limited to just Great British Pound, US dollar. We're not. We aren't limited to really anything. Anything that's a currency can be exchanged, right? We can trade Bitcoin. We can trade gold. We can trade crude oil. We can trade, indices. Indices are a topic we'll get on later, but basically they're the average of stocks, right? If we go on all our currencies, and we go to major, all these major currencies, we can trade the euro versus the US dollar, the US dollar versus the Japanese yen, the GBP USD as we called it before, right? The Great British Pound versus US dollar, AUD USD, which is the Australian dollar versus the US dollar, USD CAD, which is the US dollar versus the Canadian dollar, USD chef. Well, we call it, I call it chef, right? But it's USD CHF, or the Swissy, and that's the US dollar versus the Swiss franc. NZD USD, the Kiwi dollar, also known as, New Zealand dollar versus the US dollar. Now, as we see this, we're going to, these are just some currencies that we have. Now, we also have minor currencies. And these minor currencies, exchange all the ones in the middle that you saw before, right? So, for example, say, Euro GBP. Euro GBP is the euro versus the Great British Pound, right? Euro AUD is the euro versus the Australian dollar, right? Euro CAD is the euro versus the Canadian dollar. All these, as you go down the list, you'll be able to trade all of them. Now, when you have these, you see these pairs and you start thinking, okay, I know what the currency exchange market basically is. Now, what is these symbols? Like, what are these, like Euro GBP? What does, GBP USD mean? So what these mean is that there's going to be a comparison and there's going to be a compared currency, right? So let's say we have GBP / USD. What this slash means is versus, right? So it's versus the US dollar. Now, what this is saying is how many dollars does it take to make one Great British Pound? At the moment, I think it's 1.29 or 27, something like that, right? We're looking at it. I forgot the price. But it's basically saying how it takes 1.29 US dollars to make one Great British Pound. Cool? That's what it means, right? That's what it means. Now, this works a little bit differently on some pairs, but this is the general rule, right? This is the general rule. So that's how it works at the moment, right? The GBP versus the USD. So say if you saw something like CHF JPY, right? CHF JPY. Now, because you're an expert at trading now, right? You would know that the CHF, right? It's comparing how many yen make one franc, right? One Swiss franc, right? That's what it means, correct? And now the price that you saw in here, like on the side of the market, I don't know what the actual price is, but you know, you saw like whatever number you see here is going to be the amount of yen that it takes to make 1 franc. Fairly easy, right? Fairly easy. That's really all it is. Cool. Now that we have that out of the way, we know what the currency exchange market is. We know how it works. We know that we can trade it. Now, how do we actually trade it? There's a couple things that you need to know. First off is you're going to need a couple tools, right? And the first one is you're going to need your phone, right? You're going to need your laptop if you have a laptop, right? So so you can have your phone, you can have your laptop, you can have, you know, whatever you're using. Next, on that phone and laptop, you're going to need a couple apps. You're going to need MetaTrader 4 or MT4 as we call it, and you can just enter this on your app store and you'll probably come up with the app, and it's called MetaTrader 4, and you just download it. Another thing that you're going to need is you're going to need TradingView. This is especially made for laptop, not exactly for phone, but it works best. It's the site that we were just looking at the charts on, right? You're going to need to use TradingView. These are to basically look at charts, right? These are to just analyze the charts. Now, MetaTrader 4 is actually meant to for you to actually input trades in, which is fine. You'll get to that later. Next, you're going to need a broker. And what is a broker? A broker is a fairly complex concept that we're going to cover in a future class, but essentially what it is the banks give a certain amount of money to smaller banks, right? Bank of America gives a certain amount of smaller money to, you know, some of its subsidiary banks. Now, some of those subsidiary banks are offshore, which means that they're not regulated by the US. So what happens? Those offshore banks create their own brokerages. What is a brokerage? A brokerage basically allows you to tap into the $6.4 trillion dollar market, which is the foreign exchange market. It allows you to tap in and it will represent you in that market, right? So obviously we don't have millions and millions of dollars to put into the market for it to move in our direction. We don't. But what we do have is we do have a representative, which is our broker, that allows us to place they let us borrow money from them for us to actually put in the market, right? I'm going to go into a little bit more detail on what a broker is and how to select your own broker later on, but you know, it's a very, very complex topic and I could go on for hours talking about a broker. Now, the ones that we use is called Eagle FX. It's called Eagle FX. And when you click on our link tree, you will be able to see you'll be able to see our let me go copy it real quick. You'll be able to see our, let me see, new share, here we go. You'll be able to see our link, and that's basically what you need to go to and you need to click. So you have our link tree, right? Our link tree that we always put up in the group. You know, if you guys want to donate. And you come down here, our preferred broker, right? And then our preferred broker, you just click sign up, and then you sign up. It literally just takes your name, your email address, and your password. And then from there, what you can do is what the other thing that you need is you need a Bitcoin account, right? This is simply for you to buy the funds, right? For you to place into your account. Say you want to place $300 into your account. You would buy $300 worth of Bitcoin, and then you would deposit it into your Eagle FX account, right? Say you're in the US, you can use your Cash App. Yeah, you can use your Cash App app and it'll have a Bitcoin tab where you guys can log in and use your own Bitcoin tab. Now, one thing that you can do is you can do this. You can go to blockchain, and you can also use this website, and you can just log in, buy Bitcoin, and then it'll give you a Bitcoin wallet right here. Get the free wallet, right? And with that wallet, all you need to do is you need to transfer the funds from your wallet to your Eagle FX. And then from there, once you log in to your broker on your MetaTrader 4 app, you will be good to go, and it'll have the money inside of your account ready for you to trade. Now, a cool thing about Eagle FX, and this isn't unique to Eagle, this happens on almost every single broker, but one thing that you can do is you can open a demo account. I suggest you do this, especially if you're learning. If you're learning, right? The reason why I would like for you to do this before before anything, once you're coming in as a trader, I want you to do this and trade with a demo account, simply because of the fact that you don't know what you're doing yet. That's completely fine. Now, because you don't know what you're doing yet, I really want you to trade demo. Demo is basically, it gives you, I think, a $5,000 account, and it's fake money. But it allows you to practice your strategy, practice your risk management, practice everything that you'll learn in the basics classes, right? And that's what it'll let you do. And that's what I want you guys to do, okay? And I want you guys to start with this demo account. Now, before we go on to anything yet, I want you guys to make sure that you guys are reading our textbook. This textbook is going to help you out a lot, right? And if you guys are looking for our classes, literally just go to our YouTube, click this link, and you can follow us on Instagram and on all these other social media. Now, as we were saying, right? As we were saying, the currency exchange rate of a certain currency is going to be measured by this ticker right here on the side, right? Now that you have all of your tools put into place, right? You have your broker, your Eagle FX account, you have your Bitcoin wallet, right? BTC wallet, whether that be Cash App or blockchain, doesn't really matter. You guys will have your blockchain account, or sorry, your Bitcoin wallet there. Cool, awesome. Next, what you need to do is you need to have Telegram. And this is simply to basically stay in our group. It's where we managed our group and where everything is, basically put into place. And you're also going to need Discord. This is simply to to read our textbook. And that's basically where everything is hosted, right? All of our files, everything like that, that's where it's hosted. Now, that's basically all you need. This is all you need, right? This is literally all you need. It's fairly simple, but it's it's something that's very easy to get into, but very hard to master. Now, I think that covers everything from the basic break-in. That's literally everything that you need to know. The currency exchange market, what it is it's simply, exchanging one type of currency for another, and you trade it and you make money off of the profit, right? So say you're buying a certain amount of dollars, right? Or you're buying a certain amount of pounds, and the value of the pound goes up. Now you can sell your certain amount of pounds, right? Say it's at say the exchange rate for GU is at 1.24, right? And it rises in price, and you buy it at 1.24, and it rises in price to 1.30. Let's say that, right? It rises to 1.30. What happens? Now here you get out of the trade, right? Or you close the trade, and now you have just made this amount of profit, right? You have just made this amount of profit because you bought at 1.24 and closed at 1.30. Now say you're trading with good risk management, and you let's say you have a little bit higher of a lot size, that could be upwards of a couple $1,000s, right? Now, is this going to happen all the time? No, I'm not going to sell you guys dreams, but what I'm going to tell you is that you can catch these types of moves later on in your journey. That's basically how it works. Essentially, if you're looking at your graph, right, you're going to enter either buy or sell positions in this market, right? Say you buy it right here and you sell it up here, right? You just made, what is that? 21 pips? Yeah, I think so. And oh no, sorry, 215 pips. Yeah, 215 pips. So what is a pip? That's another thing that you guys need to know. What is a pip? A pip essentially is one unit of measurement in the market. So you guys see how the ticker on the side here says 1.3500 right here? Yeah. So these basically goes by tens place, right? So this last number you can effectively ignore. This is a micro pip. This is a micro pip, right? The one on the side is the ones, right? It's one pip, 10 pips, 100 pips, 1,000 pips, right? That's essentially what it is, right? And you know, when you're trading these pairs, that's the basic rule that you want to keep in mind, right? That's essentially what it is. Does this matter? Yes, absolutely. This matters because say you're risking, and this goes into risk to reward, which is a little bit more of an advanced class, and I'm probably going to leave it for that class. But you basically want to keep the amount of pips in mind, and you know, on your trading view, say you use a ruler, right? You can measure, and you just press shift and you click wherever you're buying from or whatever, right? And then you drag it all the way to where you are going to close, where your take profit is or where your stop loss is. And then the third number is going to be the amount of pips. So in this case, it's going to be 198, right? Cool. Now there's a couple other things that you might want to know. And those things are very, very simple. It's basically buying and selling, right? Buying and selling is fairly simple. So every single time that you buy, you're going to have a stop loss and you're going to have a take profit. This is every single time you enter the market, not just when you buy. This is when you enter the market. Now, when you enter this market, right, the middle number is going to be the amount of pips. So in this case, it is 44 pips, and the take profit is 191 pips, right? Now, what is a stop loss? A stop loss is essentially a price in the market where you're telling your broker to basically say, hey, if the market comes down and it hits this number, I want you to close me out of my trade no matter what. Now, if you're in a buy and it comes down here, you're going to close in a loss. What is, you guys know what a loss is. A loss is when you lose money. So in this case, what you're doing is you're risking a certain amount of money, 44 pips, right, for you to gain 191 pips. So the stop loss, if that stop loss is hit, you're going to lose those 44 pips. And depending on your lot size, which is a topic that I will cover in just a second, you're going to lose a certain amount of money, right? Now, on the other hand, there's the take profit, which is the one that we like. The take profit is essentially a price in the market, where you tell your broker, no matter what, if this price is hit, I want you to close me out of my trade in profit. Okay. So say, you just got 191 pips times the lot size that you just put is how much money you're going to make, right? Now, we like it when these hit. We don't like it when these hit. Okay. But they're essential. They're essential because the market, as you can see, can spike up or it can spike down extremely quickly, right? So now with your technical analysis, you're going to end up mastering, right, how to actually see or catch these movements. But as of right now, you're a beginner, and that's completely fine. You're going to learn as you go. And I want you to make sure that you're always keeping your stop loss and your take profit in place, right? Whenever you type it into your MetaTrader, the red bar is always going to be your stop loss. So type in the proper stop loss or SL, right? And that's going to basically put it into your broker and say, hey, my broker, whenever this price is hit, I'm going to take you out of the market, and also put your take profit. If your take profit is hit, then I'm going to take you out of the market. Same thing, right? That's what I would want you guys to do. Now, one last very crucial and important thing is risk management. Now, we cover this in our textbook, and I'll probably leave the most of it to our textbook. But risk management is lot sizing. Now, what is lot sizing? Lot sizing essentially is this. Lot sizing is when you place a trade at the top of your trading app, right? You'll see a 0.01, and it'll be like, like a plus, and then it'll be a minus. Now, this is the lowest lot size that you can go, which is essentially, what people trading $100, $200 are essentially trading with. This is very low risk, but it's also very low reward, right? So, like, say for 60 pips, you'll go like, $12 type thing. But also for 60 pips in drawdown, you'll lose only like $12. Now, this risk management is essentially how much do you have in your account compared to your lot size. So as a rule of thumb, until you reach $200, I do not suggest for you to trade with anything above a 0.01. Now, once you hit, say, 200 and 200, right, then you can up it one more, which means 0.02, right? And you could probably, 0.02. 0.02, right? And as you hit 300, you can probably put 0.03, 0.04 as you hit 400, 0.05 as you hit 500. Now, out of all of these, you should only have about 3 trades open at one time. You should only have about 3 trades open at one time. So if you have a 0.01, your account has an allowance of 0.03. If you have, a 200 and you're opening 0.02s, your allowance is 0.06, right? Because you are risking six lots, right, for these $200, which is fine. Okay. So the rest of this you can essentially learn in our textbook. This is just the beginner break-in for you guys to basically, take a look at what the market really is about. Now, we also do trade stocks, but that is a very, very, very complex and other topic that we will talk about later. For right now, I hope this has helped you, and I hope this has broken you into the market. Now, we are going to go over one last thing, and that's essentially how this group can help you. This group is essentially dedicated to helping people without them having to pay. The reason for this is because we see a lot of companies such as IML, such as Tradera, such as Milius, such as, all these other companies that try to charge you for every little thing. We don't believe in that. We believe in all of us having that opportunity given to us, right, to reach a new degree of financial freedom. Now, am I telling you that you're going to make millions in this market? No. Some of you may not even be made to be traders. Some of you might not make it, and that's completely fine. If trading isn't for you, feel free to DM an admin and say, hey, I think trading isn't for me. And then from there, we will go in a little bit more intensive training with you, and we'll say, okay, this is what we think, this is how we see the market. And if you still don't get it, that's fine. That's completely fine. But make sure you are putting in the work, because this is difficult. Okay, this is difficult. This isn't just some easy copy paste profit thing. That's absolute BS. Copy paste profit is absolute BS. Okay, because you're putting your 100, 200, 300 hard-earned dollars in somebody else's hands for them to mess up. And guess what? They're not going to refund you if they lose that account. That's exactly why I founded Empire Trade Group, because I want you guys to essentially learn, and I want your monetary freedom to be in your hands, right? And it's a little bit different because we're free, right? I make money in the markets. All my admins make money in the markets. There's no reason for us to be charging, is there? If your mentor, quote unquote, is making money in the markets, there's no reason for you to be paying. unless, you know, they say, oh, well, I value my time and I'm going to teach you. Okay, no, that's really BS, because you should honestly be, you should be making money in the markets. And anyway, that's just my philosophy. But anyway, we have a couple things that are here to help you. First of all, our discussion in our group, right? Our group is made for you guys to have an intensive learning environment, for all of you guys to, you know, for all of you guys to have um, an environment where you're surrounded by other traders. Let's put it that way. Right now, we do provide signals in this graph, in this chat, but we also mostly provide setups. Setups essentially say, I see GU and I say, okay, well, I'm gonna buy GU here. I'm putting my stop loss around here. You can take it if you'd like. You don't need to, but you could, right? And I'm putting my analysis out there. If you want to follow my analysis, awesome. If not, cool. But we're not putting it in like a buy NZD USD, stop loss here, take profit here. We don't like to do that, because that way new people especially get very reliant on this and they get lazy. We are very militaristic in our teaching, meaning that we're going to correct you where you're wrong, but we're also going to correct you, you know, not in a yelling way. We're going to correct you in a way that you understand and learn from your mistakes. Now, we do have our free academy. This academy is a separate chat from the discussion for the beginners. This chat is essentially where you can ask me anything, me or any admin, right? You can ask us anything. And this is the chat where basically you can drop your markups, or, you know, these are markups, right? You, whenever you do your analysis, you click the little take snapshot, and then you paste the link into that chat. And then you say, okay, I think I'm doing this right. Can you please go over this with me? Or, hey, I'm having trouble with candlesticks, or I'm having trouble with Fibonacci, or I'm having trouble with order blocks. Can you please help me? Yes. And that's where we go to help you, right? Now, our textbook is essentially the Discord, right? For all of you guys that are new or veterans here, you will know that the institutional trading textbook is the Discord. That is going to run you through the basics. It's not everything that you need to know. Once you're done with this, then you let an admin know, and we will break you into the next phase, right? But we're working on a couple tests for people to take, right? Now, on our YouTube, basically what we have is we have our free classes recorded there. We have our market breakdowns recorded there. Every single week we have a market breakdown where essentially I go over the market and I say, hey, this is what you can expect, this is what you can expect, this is what you can expect. YouTube is where you're going to get it, right? This is where you're going to get it. You're going to get all of our so, you know, this is where you're going to get everything. The Big Banks is a great class. I suggest you to watch it. Beginner to Wyckoff trading, stocks, supply and demand, right? Everything like that is going to be here. And these are the classes that we want you guys to start watching, right? These are the classes that we want you guys to start watching. Now, apart from that, sometimes we post tips on our TikTok. We post trades on our Instagram, on Twitter as well. The Patreon isn't ready yet, but if you guys are an experienced trader and you want to talk business, paid promotion, if you guys are influencers on TikTok, you know, 20K above type accounts, we can pay you for a paid shout out, and that would be an amazing way to grow this group. If you feel like you are an experienced trader and you would like a paid position at Empire, also send us a message. We would like to see your, you know, your track record and everything like that, and we can talk business later. So this is essentially our group. We're always looking to grow, and we're always looking to continue our expansion. Now, we hope you enjoy your stay. Please do not be shy. Please come on and ask us questions. Come on and, you know, bombard us with questions. We're here to help you. You're not a burden, okay? You're not somebody that's annoying us with questions. There's no such thing as a stupid question. I would rather you ask me now rather than lose money later because you didn't ask, okay? All right, guys. Thank you guys so much for watching, and I appreciate you guys for being here. With that, I hope you guys have a good day and start learning your basics.